Hi everyone, my name is Jackie, Head of Market Analyst for Trive International. Today, we are going to talk about USD SWIFT for the potential long opportunity. Before we start, let's talk about the fundamental. For USD, following the latest meeting on January 31, Federal Powell strongly hinted that a rate cut in March is probably not the most likely case. This stand presents a somewhat hawkish outlook, directly opposing the previously expected 62% probability of a March rate cut. Subsequently, Fed Fund Future now suggests a 38% chance of a rate cut in March. But according to ING, they mentioned that the dollar benefiting from robust seasonal in January and February, it is premature to argue for a resumption of the dollar bear trend. Now let's talk about SWIFT. The short SWIFT position may gain support from S&P President Jordan's recent firm stand. Expressing concern over the SWIFT sharp gain at the end of the previous years, he hinted at potential intervention measure, although immediate action is not anticipated. The increased likelihood of direct intervention to weaken the SWIFT through currency purchase of rate cut ahead of the European Central Bank and Federal Reserve in March is now evident. The Swiss National Bank, expecting inflation to align with their target, show reduced tolerance of Swiss strength. So both fundamental is align our ideas to long the USD SWIFT. Now let's talk about some market data. First, we will be talking about the DSM, retail sentiments. So according to the DSM, it showed that 84% of retail traders are on the long side, while only 16% on the short side. While our strategy is to go against retail traders, it is crucial to recognize that they are not the primary market mover. Aligning with them can be acceptable as long as it aligns with the right macro backdrop as mentioned earlier. Now let's talk about the seasonality future. So for the seasonality future, we can see that the movement of USD on the historical is show a bullish trend until end of the March. While for the Swiss, we can clearly see that the trend is going to a bearish trend until end of the March. So now let's talk about the court report commitment of trader. So according to the commitment of trader, it shows that for the USD showing a net percentage change moving from 8.1% to negative 20.1%. This indicates a significant shift in sentiment among hedge funds, showcasing a growing inclination to take short position on the USD. Conversely, the data reflect a positive shift in the net percentage on SWIFT. We have from negative 1.6% flipped to 0.9%. This indicating that speculators are increasingly adopting long position on the Swiss francs. However, it is crucial to note that the court report is not a daily indicator, but rather a trend indicator. Relying solely on this data might not provide a complete picture. Instead, prioritizing an examination of the current macroeconomic backdrop is essential. Understanding the broader economic context is crucial for a comprehensive analysis rather than relying solely on historical data. Now let's go back to the chart. This is the 4-hour chart. And today, we will have the non-farm payroll, and the market consensus is predict a strong USD for the MSP. So I predict that the market might spike down a bit to this range, right? Other market consolidate for this range, we can entry our long position in between 0.8531 and 0.846x. So this is for the today analysis. Thank you everyone. I see you in the next video.
Trive.